Hey there, it's me. I'm the problem, it's me. No, this is Scott Welsh, and so happy to be meeting with you again. And oh my goodness, do you see what's happened? It's 2024. Oh my gosh, you turn your back for a second in a brand new year, just sneaks right in the door, right? Now, it's not too late. Larry David won't yell at me. It's not too late to wish you Happy New Year, so I'm going to do that. Happy New Year. Ooh, that's a psychedelic New Year. Look at that. I could watch that all day. Now, I had many topics I want to talk to you about, but unfortunately, I watch a lot of videos about things that I find interesting, things that I can find helpful. And every now and then, as you know, if you listen to the videos on this channel, I come across a topic that makes me absolutely furious. Furious in an online outrage sort of way. But that happened. It happened from a very big YouTube creator. Well, I hate that term, YouTube creator. I almost hate it as much as the word side hustle. I think 2024, my goal is to never hear that word again. But anyway, it was a creator with hundreds of thousands of subscribers. So big time creator, right? And lots of views. So, first of all, take into account with this video that someone who has more subscribers and more views than me is definitely smarter than me. So you can listen to them and not listen to me. But the fact that it's so smugly presented, even if the information is okay, and the fact that it's so sanctimonious, holier than thou, I guess I'm fragile and triggered. Don't like that word either. I guess I get upset because as a tennis pro, for over 2 decades, when tennis pros start talking about my way is the only way, and if you don't hit a forehand like this, you'll never get it, and blah, blah, blah. Well, there isn't one way to hit a tennis ball, not even close. There are dozens of ways, and anyone who says there's only one way to do it is a liar. And I spent over 2 decades of my life proving that to be the case. And by the way, I won the case because my students play differently and they beat all the people who do the one-way stuff, okay? So I've seen it with my own eyes. But guess what? Trading's the same thing. There isn't one way to do it. Personal finance is personal, as Morgan Housel, very smart person, tells us, right? But this video was just like you see on the screen, very, very condescending. And the argument was for index funds and how they are the only way to build wealth. And the title of this video is obviously contrary to that. I beg to differ. Index funds are an option. No pun intended, get an option. Index funds are an option. But here's the thing, and here's what I want to try to prove with my own trading and with videos and with research. Index funds are the least best good option. Index funds are better than nothing, I suppose. Kind of. But buying and holding the index fund, it's the least you can do. And we can do so much more. And I want to prove that. I'm just so tired. I want the proof to be so obvious that there just isn't an argument anymore. I want someone to make a video saying, I do index funds and it's the least best good option. Right? That's my goal. Okay. Nonetheless, here's the argument. You ready? Here is the argument why you're terrible at investing and how you can guarantee success. You ready? This is it. Exhibit A. Here's the QQQ. By the way, that has beaten the market, beaten the SPY, beaten index funds, beaten VOO, beaten VTI, whatever your favorite index fund may be. Here's the QQQ. Now, here's the argument. If you just wait long enough, according to historical data, if you can just wait, if you can just writhe in misery for long enough, you will eventually win, and it's guaranteed. Looky, here we go. In the year 2000, right, this was the dot-com. By the way, the biggest bull market I've studied. I have to go back and dig deep into the 20s, and I wasn't around for the tulip bubble in the 1600s. But study, I've read books on the dot-com. It is the meme stock craze for years. It's crazy. So let's say we bought the QQQ somewhere around here, anywhere in this area. Why wouldn't you? This is the new normal. Stock valuations are based on clicks, they're not based on earnings or anything else. The old days are over. So you bought here because it's only going to go up. Well, my friends, looky, looky, looky. Oh, that's harsh. Oh, then it went up. That's harsh. Then it went up and went up and went up and went up. And yay, by 2017, you would have made money again, right? We're judging this by new highs because if you bought here, your investment is worth less. So if you're guaranteed to win, what does that mean? You're guaranteed to make money. What does that mean? It means you're guaranteed to have more money than you used to have, right? Well, if I bought here, I had less money than I used to have for 17 years. That's the argument. If only you can wait 20 years, you'll win. Who wants to wait that long? That's the best option, okay? But that's the QQQs. What about the SPY? Oh, here we go. I'm glad you asked. The SPY in 2000, right? It's the new normal. It's the new way to trade. In 2000, you would have bought here because index funds are the only way to trade, and we're smart investors, right? So I bought in 2000, and looky. We got back to even, and then 2008 happened. And we didn't make a dollar, right? Guaranteed to win means more money than before. We didn't have more money than before until 2013, okay? That's 13 years at least, probably a little bit longer depending on which month and blah, blah, blah. But you did have more money, and it hasn't come back here. So on one hand, I get it. If you can wait 13 years or 17 years, or as the video's argument goes, 20 years going back to the 1920s. Going back to the 1920s, it's hard to even say it. If you can wait 20 years, you'll have more money than you used to have. You won't have more money until 20 years is up, but you eventually will. And so, dear friends, right, that is why index fund buy and hold is the best. It's not market timing, it's time in the market. I'm sorry, hard for me to even say those words. There's a lot of words I can't say in this video. Okay. The argument in summary is the reason index fund is the best way because all you have to do is wait 2 decades. Is it just me? I'm not the biggest. You know, I get it. But people have more subscribers than me. I get it. More views. I get all of that. Seriously? You're nodding your head and saying, yep, that's it. That's how you do it. Well, let me throw something else at you, shall we? I've talked about this before. This is updated. It's on the YouTube channel, my YouTube channel. There'll be a link to it. It's finally a futures portfolio, right? So go back and look at it, right? The ES, so we're trading the market. We're trading the SPY equivalent of futures. It's on a 5-minute chart, and it uses the RSI indicator. Now, I can't go back to the 1920s, but we saw the same comparison, right? This is from 1997 to now, 1997 to now, 1997, barely, but 1997 to January 3rd, 2024. Remember the previous slides? All you had to do was wait 20 years, and then you win. Look at this strategy. The green dot means new equity high. A green dot means you had more money than you had before, right? It's growing. New equity peak. My equity is the highest it's ever been with every green dot. Okay? Oops, right around 2000, even automated strategies struggle at times. It went up, went down, and then you see this green dot? There's another green dot. Well, I measured it for you, and that's 3 years. 3 years before you made a new equity high. Not 13, not 17, not 20, 3. And you look at this one here, that's about 3 also, a little bit less. You look at this one, less than 3. You look at this one, less than 3. So this is the biggest. From 1997, call it 1998, to 2024, that's a couple years, right? That's a decent sample size using a basic system that trades breakouts on the ES futures, the longest you'd ever have to wait is 3 years. How is that not a better option? I'd love to hear the argument how waiting 17 years, 13 years, or 20 years, that's better than 3. Not to mention this makes more money. Not to mention this doesn't include compounding. Not to mention all that. Well, here's the difference. This is all fake optimization. Well, I haven't optimized this in months, practically, maybe about a year. Second of all, how is that different than the stock market data? You're just going back and looking at data. That's historical data. This is historical data. Well, mine's manipulated. All right, fine. It's manipulated. But guess what? Take this yourself, right? Go to the other video, use the inputs that I gave away for free, plug it in, and look at it. It's not optimized if you just copy it, right? If you don't change it, it's unoptimized. And watch it. Watch it go, right? All it is buying breakouts and not buying and holding. That's the concept, right? And here's what it looks like. We're on a 5-minute chart on the ES.D contract, which means regular trading hours. When RSI goes overbought, it's in a trend. It's trending. So we buy during the day and we hold it. Usually it doesn't even last past that session. On rare occasions it goes past and we get out the next day pretty early. But most of the time it's over during the day. Has a profit target, has a stop loss. And there you see some stop losses kind of convoluted up there. But here's another one. Broke out here. Got it. Here's another one right here. RSI hit our profit target. Here's one. Oh, it broke out on the RSI, but then it stopped out. Oh, then it broke out again. Broke out and lost. Doesn't win every time. But guess what? The market doesn't go up every day, does it? In fact, it cannot go up for 20 years. Am I crazy? Am I taking crazy pills? This one video, while trying to be helpful, it's kind of made me motivated. I've developed in the last few days before making this video an obsession with finding better options. And that's where we're headed now. I want to present on this channel as many free possibilities that can be used instead of index funds. I want you to test it for yourself. But I just want to throw out so much proof that buying and holding index funds is an option. It's the least. If I show 30 strategies, I want index funds to be 31. If I show 100, I want index funds to be a 101. I'm tired of the index funds are the only way, you can't time the market garbage. So as it says on the screen, I'm going to post as many free strategies as I can. Maybe I'll even change the cadence and go a little bit more than once a month. I just want something to be unassailably better than SPY or its friends, okay? Now, futures is the easiest way. Futures beats the market, a buy and hold of the index fund. It beats it rather easily. It's going to be fun posting strategies like this for futures, but that's not all. I'm going to stretch it out and do other things too because I've got a bunch of other ideas, okay? So that is the course that the channel is taking in 2024. I hope you're interested. And I hope you're as motivated as me and Dwight because we are ready. Let's finish up a speed round. Like and subscribe, of course. I'd love to get this to 500,000 subscribers in 2024, so that shouldn't be too hard. And for more ideas, and I track a bunch of strategies, go to scottwelshstrategies.com, hit the performance page or resources. I have the blog there. Oh, there's so much on that website. You can't even believe it. Happy New Year, everyone. Really looking forward to putting out some strategies that do better than those index funds. Bye for now.